Happy Friday, everybody. Hope everybody's having a great week. Another week in crypto and NFTs. Never a dull moment, I tell you. Never a dull moment. How's it going, Dow? How are you today? Are you feeling better? I know yesterday you were sounding like shit, to be honest.
Yeah, I think it's just the flu, but I don't know. Yeah, I'm feeling better day by day. My voice is a little bit better, but I'm excited. So I'm about to make some coffee because I think this one's gonna be exciting. So I'm ready for this one.
Awesome, awesome. Tammy, how about you? How's your day going?
It's going great so far. Started early yesterday. I was out. God, I think the first time I sat down yesterday was probably around, well, to drive obviously, but then maybe around 8, 8:30. I was tired. But the week went by fast, but it was a great week. It's starting to warm up here now, so we like this time of year in the Midwest when we can start to thaw out a bit. How have you been doing?
Aw- Good, good. Can't complain. Hot and sunny down in Florida. Another warm, beautiful day. So can't complain about that. And then did want to welcome today our special guest, Revest Finance. Who do we have behind the Revest account?
So that would be Rob Montgomery, the founder. Nice to meet
Welcome,
y'all.
Rob.
Good morning, Rob.
How you guys doing?
Doing
I'm
well. So, all right, we start off always with the most important question of the day. Are you a coffee drinker, and what kind of coffee are you drinking?
so I'm gonna hop in. I am currently drinking a bunch of Kirkland, the Pacific Bold. I got tired of paying a ton of money for Keurigs, and so I just went to Costco and bought it in bulk. And I'm on my second cup already.
Costco does everything right. I swear to God, anything Kirkland that I buy, I absolutely love. So you can't go wrong with Costco. I'll just put that out there.
Yeah,
Alright.
Costco gives me anxiety. I don't know, all those big packages.
Maybe I have hoarder problems that I don't realize that I have. Possibly. But yes, you do get, when the whole pandemic was going on, I think that we owned stock in their paper towel and toilet paper because you never knew when you're going to run out.
I still have toilet paper in my shed from that whole pandemic thing. Yeah, I was one of those crazy people
So
that.
that was real. I was watching it
Yep.
from
Yep.
Colombia. I was thinking that was a joke. So people in America were actually fighting each other for toilet
That
paper.
was real,
Wow.
My
Dow. Like it
wife
was so
was my
real.
girlfriend at the time. My wife was my girlfriend at the time. She would go out every single week. So we moved in with my folks to weather the storm, and she'd go out every single day and hit like three grocery stores. Her trunk was full of toilet paper and paper towels entire time through. We were living off it for the next year.
I'm dead though because
That's
we weren't worried we were gonna die, Dow, here in the US. We were just worried we wouldn't be able to wipe our ass or wipe our countertops for some strange reason. So Dave would send me out too. He's like, "You gonna go to Costco today?" So you had to go there when the shipments were there. So I feel you. I feel you on that because I was the scout. I was going out to get our rations for toilet paper and paper towel. I feel you.
Yeah, that's funny. Glad we're past those times. But yeah, I'll definitely, I know the coffee can get expensive. I do the Nespresso pods and I literally like order 100 pods at a time. Like people look at, my boyfriend sees me and thinks I'm crazy when I get these big ass orders of Nespresso pods. But yeah, let's go ahead and kick it off. Because we got a lot to go through, and yeah, and I know for some people it's a holiday, for some people not. I don't know. I still had to work today and do crypto and coffee, so just another day here. But before we get started, just quick disclaimers. Just nothing said here is financial advice. We are not financial advisors. This is strictly for entertainment and sometimes, I'm sorry, educational and sometimes entertainment purposes. I really got to get an AI bot to do this disclaimer stuff. And then the second part of my disclaimer is shout out to my partners at Binance US. No trading fees on ETH and BTC. And you can check out my pinned tweet for more information on that. But to kick it off, before we get into the weekly craziness that's been going on, we do have Rob here from Revest Finance. So welcome, Rob. And from what I know about Revest is you guys are finding a way to kind of use NFTs as financial instruments, which is really interesting because I know we think of, a lot of people think of NFTs as like JPEG pictures and animal pictures and community. So interested to hear more about like the different side of it.
Yeah, so it's fantastic to be here. We definitely have been pioneers in the field. What we focus on at Revest is really two things. First off is our original protocol, the Revest protocol, and that is the financial NFT engine behind our system. We looked at what Uniswap v3 had been doing back in 2021, and we saw a spark of brilliance in that concept that we thought should be expanded. The idea of tokenizing a position, not as an ERC-20 token, but because positions are unique, tokenizing it instead as an NFT. We built an entire interface around the concept, completely interactive web app built right into the NFT. And then we went off and built our second product line, which is just now about to have a new release in the next few days. And that is called Resonate. And Resonate uses Revest as its backend to allow people to get fixed rate upfront returns on their future yield. And so we've just been using these financial NFTs to represent positions. We're working with a lot of people on setting up loans for them. We're working on marketplaces. And there's an awful lot to dig into, so I'm really excited to be here to talk about it.
Love it. And yeah, on that point, just, me listening to you and trying to absorb everything, like, could you elaborate more on that part of tokenizing positions? Like, what does that mean?
So when I talk about tokenizing positions, when we think about let's say that you go to, actually, let's start the most simple one. So everyone here knows about vested tokens, right? I'm going to assume everyone does.
Yes.
The idea is if you're starting a token, you need to vest the team's tokens. You need to vest the VC's tokens. And you want those to be stored, locked for a period of time. That's the most easy, simple base case. Now, a lot of times those positions, they're locked to an account. And in fact, if you think about VE Curve, that's actually another good example. VE Curve, your position, your tokens, they're locked to your wallet. You cannot transfer them. So what we figured out how to do is rather than having those positions be bound to your wallet, we figured out through the creation of a technology called a smart vault how to tie them to an NFT instead. And that means that now these positions are portable. If you let's continue with VE Curve, since that's something everyone knows. If you wanted to be able to sell your position on a VE Curve system, normally that position, it's locked. It's not transferable. But with using one of our systems built around that, you would be able to transfer the rights to those locked tokens that can then be retrieved at a later date. Of course, we've taken it a step further and we go beyond locked tokens to tokenizing more complex positions. Things like an option or an interest rate swap, where it's closer to a classical derivative. And because it's complicated, it doesn't make sense to put it in an ERC-20 token. But it does make an awful lot of sense to put it in an NFT.
Makes sense. Any questions so far before I go on? I'll turn that to Dow or Jesus or Tammy.
Yeah, to me, this is a very exciting project. I've been talking to Rob for a minute. I've been looking at Revest for years. I think what he said is very key, right? When people think about NFTs, especially back in the days, it was always this assumption that we were talking about PFPs and more like a fun use case, right? But I think Revest was one of the first NFT that really put that vision beyond simply PFPs and say, hey, we can actually have utility and we can actually be I guess, a primitive for DeFi, right? And what's interesting about what he just mentioned is that not only from an end user, you're not locked into that vested position, right? You can actually resell it as an NFT. You can go on, let's say, OpenSea and resell it. And I'm sure in the future there'll be NFT marketplace. They'll be able to actually integrate with the underlying value inside the NFT vault, right? As this technology has become more and more popular. But also from the point of view of, let's say, a protocol, right? If you're vested in them and they don't have to, withdraw that position, right? Those tokens stay staked, right? So there's less liquidity in the market. So you can imagine the same thing could apply for a liquidity provider position, right? If I can know, for example, that, and I know that that's the case for Revest, right? But like a similar example where I can lock my liquidity providing position into NFT Vault, and instead of having to withdraw the liquidity and reduce liquidity for that protocol, I can simply trade that NFT and that liquidity stays there. That's another great use case. So I think that primitive is so powerful. This idea that you can use NFT as a vault and you can store all kinds of things there. You can, and maybe one question for Rob before I continue is, can you kind of describe the relationship between Revest, like the original project, and Resonate? And I think that'll be clear for a lot of people.
Yeah, absolutely. So once we'd launched Revest, we figured out pretty quickly that we built an engine and that our initial market segment, which was vesting, was, well, most people will just go use Unicrypt or they'll go use TeamSwap or TrustSwap, whoever it is, because they're free. And it's not a great way to make money offering those services. So we came to the realization that both because it was a bit too simplistic, and because the market wasn't there, and because we'd really just built an engine without a game almost. Like you could think about it like if you just had Unreal Engine without Fortnite. That's a very good way of explaining the situation we were in. So we realized, okay, we need to build something to show people what Revest can do. And I like to think that that's a lot of my entrepreneurial journey is we build something, we realize that we've made it a little too complicated and too tech heavy. We look for a market and we hone our approach to the point that we get down to something that's just very simple to use. So what came next is Resonate. Resonate was our go-to market for Revest. It was our flagship system. And Resonate uses Revest as a backend, as an engine that gives Resonate the FNFTs it needs. The way that Resonate works is that you come and you lock up your tokens in a yield farm, like Yearn or Beefy, and you sell as an FNFT the rights to the yield that yield farm will generate over, say, the next week or two to somebody else who wants to pay you up front for that yield because they think it's going to make more in that next week or two than they're paying you right now. And so Resonate was a way both for us to create a profitable business and for us to get the FNFTs into the hands of real users and get them out there running around the world. And now we've even further simplified the process with an additional interface for Resonate that takes away a lot of the complexity that our UI had at launch and just simplifies the process to a few clicks. And that's coming out in the next day or two.
Do you find that people traditionally, when they're utilizing your platform, do a lot of trading between liquidity sources in an effort to make a profit on arbitrage between these positions, or are they traditionally more long-term holders?
Can you elaborate?
Yeah, so I imagine, for example, if I'm locking up a position, let's say it's US dollar coin, right? Nice and simple. I have a US dollar coin position, and I don't really see this one being swung too often because the value of US dollar coin hopefully doesn't change too much from a dollar. But let's say it maintains a dollar, right? And I'm locking this position for a few years, and let's say I get, I don't know, 4% a year or something. I'm picking a random amount. You get the point. If I'm selling this position out to someone else, obviously I'm selling the future yield, right? And I'm representing that in the form of the NFT. So the whole position is being represented by this singular NFT. So the future yield may be, I don't know, like I said, 4% a year. But let's say I'm selling in that instance. What does a user usually see? You know, like a 1% increase in value because obviously they haven't determined the full life cycle of the vested interest of the asset, or do they usually just see it at market value?
So typically what will happen is you're estimating the yield. That's what you're getting paid with, right? You're not selling your principal. What happens is you get an FNFT yourself. And that FNFT represents your rights to reclaim, say, $100 of principal. You're selling them the rights to all the interest. In this case, you're saying 4%. And the rights to the interest are represented as a second FNFT that they get. So typically what we would see is you used 4. Okay, let's say that you get 3 because you're not going to get the future value of the money. You're going to get the present value or somewhere thereabouts. Add in the volatility you see around interest rates, and you'd probably be around 3 for a year if we're talking about $1, but there are much higher rates than that.
Yeah, I think one thing to be said, right? Like someone said in a tweet, I think this week was the hardest thing to explain about DeFi is not DeFi itself. Or the reason it's hard to explain DeFi is not because DeFi is complicated, is because TradFi is complicated. And DeFi is kind of building the financial primitive that are existing in TradFi and then some and beyond,
It's
right?
very interesting,
But what
though.
these guys are talking about is really this concept of interest rates derivatives. And the idea there is that if I'm holding a position, right, a yield bearing asset, and I have this variable rate, uh, if I'm trying to be safe, if I don't want to have exposure to variability, then I can go to a platform like Resonate and then trade for instant payouts or maybe like a fixed rate, right? And that's very popular in TradFi. I think that the market is around like 5 trillion per year. So it's a massive use case for a lot of investors to be able to
Actually,
hedge their risks. Right?
I'm gonna tell you, the market for interest rate derivatives is actually 800 trillion.
Okay, never mind. Never mind.
Yeah, no, it's a huge market. It's a ridiculous market in TradFi. In our case, the one thing I really love to emphasize about the way that our system works and the reason that it makes sense to use it, and we typically don't think in terms of like a year. We typically think 1, 2, maybe 4 weeks because that's the speed that DeFi operates at. We're not TradFi. We're not locking money up for an entire year. We can do that, and that's an advantage we have over a lot of other folks who've tried similar stuff. But typically 1, 2, and 4 weeks is what's popular. But what I really want to hammer home here is the idea that now that you have that money up front, because you've gotten paid your future interest today, you can go long ETH or levered yield farm. You can go do incredibly risky operations that you normally would not do because you'd be risking your principal. But because you are only doing these operations with money that you would have made over a period of time in the future, if you get liquidated on those operations, this is actually what our new tool is, you still get your money back at the end of that lockup period. So if you get the forward yield, if you get a week's worth of yield on your dollars, you can go open a 50x long on ETH. And now you've got $100 worth of exposure to Ethereum without actually holding any Ethereum at all.
That's insane. That's awesome. Rob, did we lose you or
No,
we're
I'm here.
Okay, I have one question before you go, CJ. So you guys are obviously mixing a lot of elements from traditional finance and kind of trying to do something different in DeFi. Where did this all come from? Do you have a TradFi background? Like, how did this all come about that you guys decided to create these products?
Honestly, I have no TradFi background at all. I'm prior to this, I was doing my doctorate at Georgia Tech in nanothermal engineering, and when I got engaged to my wife, I realized just how much I hated my job and was not happy. I've been in crypto since 2013. I was an early Bitcoin adopter, and I just dived into DeFi. Dove right in, started playing around, and pretty quickly realized that my longtime love of programming, my love of crypto, had a very strong intersection. And then I taught myself the rest of finance. It's This idea just came to me from thinking about ways to make money move in loops. I didn't even know that interest rate derivatives existed until after I had it.
That's awesome. That's awesome to see. Go ahead, CJ. Sorry about
No
that.
worries. That was a great question. So I have two NFTs for one position, right? I have an NFT that represents my collateral and I have an NFT that represents my yield. So in theory, if I sell the NFT that represents my yield, and let's say, I get 25% of the realized value, the person who purchased it, in theory, will get the remaining 75%. But then with my other asset, the asset that I have as collateral, I still need to maintain that asset if I want to continue ownership over it in that staked position or collateralized position for that whatever the lockup period is so that other party can realize their yield, right? So if I want to get rid of that other position, then you got to sell it at a loss, right? Or relative and value wise at a lower value, right? Or I have to hold it up for the whole yield period, and at that point it's like, well, I might as well have just kept the yield for myself instead of selling the vast majority to someone else.
It's a risk that you take. That all said, when you do this with USDC, hopefully you don't have any such issues. When you do this with ETH, well, I hope that you are okay with locking your ETH for a week. I'm okay locking my ETH for a week. And to actually address that, we are working on lending. We're working on lending and we're working on markets. Selling at a loss, yeah, you'd probably have to take a 5% haircut, which would not be fun, but hey, it's 5%. Lending, though, opens up a really interesting set of possibilities. Because if you can take that locked collateral and get a loan on it, then as long as you're okay with holding the collateral, okay, if you aren't okay with the holding collateral, just get a loan. You're good. You can, in the worst case scenario, you're only going to take X amount of a haircut and you're fine. But in another scenario where you are okay with taking on a bit more risk, you can actually get a loan, loop the trade, and then so you come to Resonate, you get, say, 10% up front, you take the collateral FNFT, go to our friends at Spice Finance, get a loan on it, come back to Resonate, get another 10%, go back to Spice, get another loan, loop, 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 loop. Does that answer your question?
Kind of. I guess I'm just trying to point
Well,
out that, of course, with any of this, there's two sides to everything, and really what you're doing is you're still taking out a long position no matter what, right? Where in the example I gave, you're taking out a long position on a stable asset, which obviously, in theory, hopefully, it should maintain its value. But in other cases, with more volatile assets like Ethereum, it could be worth more, it could be worth less by the time your position is can be uncollateralized. And the example you gave was 2 weeks, but more commonly we see lockup periods of months plus, right? So obviously there's a lot more room for volatility in that window. But it's very cool because this gives people options,
we
right? If they want to exit that position, they now can. They're not forced to ride it out for the remainder of time.
So we actually don't, and I agree with you that you're getting at. Yeah, you can exit, but we don't actually see lockups for very long typically. What we've seen our users doing is typically 1 to 2 week locks. The longest we have on a recurring basis with one of our hedge fund partners is a 4-week lock. But people don't like to go over that because of the exact risks you just described. What we do also see, and this is probably also worth mentioning, is delta neutral positions. We see an awful lot of delta neutral positions because when you do a delta neutral yield farming system, what you're doing is you're opening a long, and this is for everyone who doesn't know what delta neutral is, which, hey, I didn't know about 6 months ago. You open a long on an asset, say Ethereum, and then you would go to Binance or GMX or DYDX, and you open a short in the same size as your long. And then you can go and farm your Ethereum and make your returns with your long. And if the price goes up, your short is worth less and your long is worth more, and they cancel each other out. And if the price is worth less, your short's worth more, and your long's worth less, and they cancel each other out. And the beauty here is that these positions, what'll happen is people will get into a delta neutral position with a pretty good idea of how much their short will cost, because those are quite predictable, those rates, but a less good idea of how much yield they're going to get. And using us, they can realize exactly how much of a return they're going to get before they ever even open the position. And it makes the entire structure far more predictable.
Great question, CJ. Go ahead, Dow, and then we'll go to Tendi.
Yeah, so if people don't know, Rob is the founder of FNFTs, right? The concept of financial NFTs. So I'd love to ask you about the long-term vision for FNFTs, right? Because as of right now, right, the major use case is PFPs, maybe gaming. But in the context of that conversation, most of the primitives, the financial primitives in TradFi are actually not fungible. So I think that gives a bit of a hint. But like, what's your vision? Do you think it's financial FNFTs become like the main use case? Do they dominate DeFi? Like, what's your long-term vision for FNFTs?
I think they're going to be a huge part of DeFi. We are in the very early stages, and I hesitate to say this, but we are in the very early stages of Revest V2. We've realized that our original system has some drawbacks. It only supports one NFT contract, which obviously is less ideal for partners who we've had using it. It's not as universally accepted as 721 because we used 1155. It has technical debt that's accumulated over the years that makes it harder to adopt. And so what we want to do, okay, there's two things that a good FNFT system needs to do. One, needs to have a good interface that's decentralized and always accessible to the user. And two, it needs to be easily valued on chain so that things like loans and things like FNFT marketplaces, where you have a price that's based on what asset is inside the FNFT, can accurately represent what's inside the FNFT. You need to always know how much assets are in there, what are they worth, if you want to be able to give a good on-chain loan. So what we're looking into now is building a universal system for any NFT in existence with, of course, our own interface still quite present if people want to use it. We want to modernize the system, and we want to introduce a universal adapter so that anyone else who's built an FNFT system, I know of several groups, Uniswap V3, a lot of the NFT loan guys are using them as receipt tokens, but no one has a standard. Nobody has a commonly agreed upon way to value what assets are in these things. And so we want to build a very simple system that they can just plug right into and be able to have their FNFTs valued the same way that ours are. And once we get that universality, once we have built out that ecosystem, then suddenly I think we're going to see NFT finance take off. I think we're going to see financial NFTs take off. And I think that they are going to become the dominant method for representing any derivative in DeFi.
Great question, Dow, as usual. Tendi, I see you had your hand up. Did you have a question or comment for Rob?
No, I'll go after the Rob segment's over. Also,
Okay.
Good morning, and Ribbit.
Good morning,
Ribbit.
Tendi. Thank you. So that's a good point that you made with the V2. Kind of, it was a question that I was going to ask. Like, so currently the financial NFTs are kind of like separate than existing NFTs. So will the V2 make it that any NFT can be used as a financial NFT? Is that what you're saying, Rob?
Yeah.
Could you elaborate on that?
Yeah, so they're not entirely separate. They are ERC-1155 compliant. So they're normal NFTs. They work on OpenSea just fine. But what we see...
Do you plan on supporting ordinals?
Tendi, let him finish. Let him finish, Tendi.
If ordinals can figure out how to be Turing complete, then yeah, sure.
Hey, I mean, you could do the same thing on Ethereum. All you got to do is inscribe each individual way.
Oh, Jesus Christ. The level of autism is beautiful, but horrifying. So, what we're planning on doing is we want to build a system where any NFT can become a financial NFT, yes. But it's not so much so that profile pictures can become FNFTs. We see that as a benefit, sure. It's very easy to build that sort of a system. It's more that as we've progressed as a financial NFT engine, we've realized that people like to have their own NFT contracts. With our current system, it's a monolithic contract. Every single one of our partners who's used our FNFT system is on the same NFT contract, meaning they're on the same marketplace page as our baseline system. And obviously that creates confusion. So that is a major technical limitation of the V1 system that we want to address with the V2. And we've noticed people coming up with FNFTs that are, different than ours. Take Uniswap V3, for instance. That's a great example. It's everywhere. It's omnipresent. A lot of people use it. The Byte Masons just came out with an FNFT system of their own for staking. Velodrome has FNFTs that they use to represent the VE positions. If you look, FNFTs are all over the place, but there's no commonly agreed upon way for an on-chain system to tell how much value is in that FNFT. There's no easy way to value them. And it's not hard to value them. It shouldn't be. But all of us who are using them, we need a standard. And we want to be the people to propose, publish, and release a standard for anyone to come plug into and be able to value their FNFTs and be able to bring their FNFTs to marketplaces just the same way that OpenSea can work with every ERC-721. We want that sort of functionality for FNFTs.
Yeah, I posted a short video in the next like 40 seconds. And during that video, you get to see the actual UX of Revest FNFT, right? You can actually click on the video, watch it, and you'll see that it has that UX that's very user friendly. That kind of tells you how many token. Maybe you have like a 1,000 chain link inside the vault, and it will tell you all the details as to which addresses it connected to. I think also like what reward you might get and when it unlocks. Right, it has this circle that basically gives you an idea of how much time is left in the vault before it unlocks itself. But if you quickly look at the video, that could be a path towards a universal standard for FNFTs, because the issue is you don't know what's inside of it, because the NFT standard is not really meant for necessarily financial primitive to be locked inside of it. But if you wanted to build a marketplace, you would want different FNFT solution to at least agree on the standard as to what or how to represent what's inside of it, so that users can actually say, oh, okay, well, this NFT has X amount of Chainlink, which are priced at, through, let's say, the Chainlink Oracle at this amount of price, and so it has that value. So it's an easier way for you to reason about the financial value that they contain, right? But I think what Revest has already done is a pretty good couple of steps in that direction. So I think it's already a good standard for it.
Yeah, we know you like standards, Dal.
I
See,
absolutely love it. That's why even the answer around like ordinals, I agree with you, Rob. It's going to take a while before we see FNFTs on Bitcoin.
yeah, I think it's way too early to be thinking about ordinals, but hey, Tandy put it out there. So, and Rob, you're an OG Bitcoiner, so you never know. You never know.
Hey, I'm on my way to inscribe individual way right now. All right, y'all are gonna be so salty when I find the first way on the blockchain.
Ribbit.
Call them BNFTs. What's up, Death?
Morning, guys, and of course, always thank you for having me up, Jess. I just had a quick question. Are you guys a registered financial entity, or
Wait. Why are we always asking this question?
No.
No, Death. We're not gonna. You've asked this question in the past two guests. No.
So, as far as we can tell, we are not a broker, nor a dealer, nor a money transmitter. We facilitate interactions of individuals using what could be deemed analogous to a vending machine. That is what most smart contracts are. And since it's a peer-to-peer system and we don't have any custody, it is up to individuals using it to determine compliance.
Great answer. Great answer.
I mean, hey, we deal with our three biggest clients, well, two currently, but soon to be three, are hedge funds. So we know about the KYC song and dance. They have their whole side of that, and well, we put them together with people who are willing to play that side of things. But those are all questions that I find are best left to attorneys.
Yeah, that's great to hear. Thanks for answering that, and thank you for the question, Death. If anybody else has a question that's non-financial, not tax related, or about their business structure, feel free to hit request. But I did have a question. So obviously we've seen recent exploits in DeFi and things like that. What are you guys doing to ensure trust in or what type of security measures are you guys taking to prevent any exploits and things like that?
Yeah, so I'll be forthright. We got hit a year ago. We survived an exploit. We rebuilt, we recovered, and we built back with some of the strongest security in DeFi. Both Revest and Resonate have been audited by Zelic and BlockSec each. Zelic, many of you will have heard of. They're one of the most prominent and rising stars in the auditor industry. BlockSec's less known, but they are equally as capable. They are by far the dark horse. They're just incredible. You can find a lot of their write-ups on the major exploits that we've seen recently. We had a private bug bounty prior to launching Resonate and paid out roughly $15,000 in bounties to developers and white hat hackers who managed to find holes in our system. We employed ongoing AI-driven fuzzing techniques to test the code prior to. We have Immunify bug bounties for both Revest and Resonate. And if I hit all the points, no. Oh, I should talk about smart vaults. And the smart vault structure means that even if someone was able to get past all that the way our smart vaults are set up is that every FNFT and every order on Resonate has its own contract associated with it. When you create a position, we send the the tokens to an address that has no contract at it, because we can pre-compute where a contract will live in the future. When you withdraw, we create a contract at that address, we withdraw the tokens, and then we self-destruct the contract, saving you gas. Now, what does this mean? Well, first off, there's no contract to exploit at where most of the tokens are stored because the contract only exists in the span of one transaction, and it never exists between blocks. But further, it means that even if you were able to figure out how to get past all of our defenses, you would still have to hack the money one by one by one by one. There's no big pot that you can just go attack. We sandboxed our value storage. And that makes it, rather than O of 1 complexity to steal everything, it is O of N complexity. For those of you who have computer science experience and understand how ridiculously nerdy I am being right now.
Interesting. Great answer. Anything else from anybody else on the stage? Any other questions for Rob? I know we are coming close to the hour, so I'll give you guys a chance. If not, then I'll move on.
I do have one more question. So outside of Revest and Resonate, what's another use case for financial NFTs that you're excited about?
Oh, dear Jesus, there are so many. I would say debt, 100% debt. So as we see more TradFi moving into the space, they're going to bring their practices with them. And that means unsecured lending between, KYC organizations, things like, JP Morgan loans, Bank of America, $10 billion, something along those lines. As those guys show up, they're going to need ways to represent the debt that is being passed around and the rights to the interest that is being passed around. So I foresee a future where you have soul-bound FNFTs representing the debt and the obligation to repay the debt, and then FNFTs that represent the rights to get the repayment of the debt, where when I create a loan with a big organization, I will issue them that soul-bound FNFT. It'll be tied to their wallet, and I'll send them the money, and then they'll have to start paying back the debt via the FNFT. Meanwhile, if I want to sell the rights to the debt, which is just what a bond is, I can just go sell the FNFT. So I'm really excited to see how that develops. I think that's going to be a really interesting area in the next few years. I know a few guys who are working on-chain debt structures, and it's really cool. Might be working with me. Who knows?
Great question, Dal. Great question. And so I know you guys recently announced Resonate. You have the V2 coming up. It seems sometime in the future. Anything else that you guys are working on or recently released or is coming soon that maybe you want to let us know about?
Yeah. So the Regen portal, that's what we've recently come out with, or are about to come out with, actually. We've realized from our experience with developing Resonate that people need help understanding what is going on with the people need help understanding what's going on with Resonate. And we've come out with a way that we can completely and totally automate the process of helping them to understand what it's doing by getting them upfront yield on the dollar via a position on Arbitrum, and then opening a position on GMX or MUX at the same time. on Ethereum. Long or short, it's a one-click tool. It's going to be launching in the next few days. And yeah, everyone should go check it out once it goes live. It's really easy.
And when is that coming out, Rob? Is that coming soon, you said?
That'll be early next week.
Ooh, nice.
Yeah.
There you go. There you guys have it. Straight up alpha, straight up alpha. Let's see. So that's coming out, and then you mentioned V2. And yeah. Anything else that maybe that you missed or that you want to tell us about before we wrap up, or see if anybody else has any last questions?
Nothing at all. I think I've hit all the points. I've really enjoyed being here. It's great talking to y'all.
Yeah, sorry, we're a little all over the place at times, but it's a great group here. Loop, what's up? Welcome. Good morning.
Hi, good morning, Jim, everybody. Yeah, great to be up. Thanks for speaking. This is extremely interesting. I love kind of the direction you guys are going. Would love to hear just where you think that vertical is going, and kind of the DeFi side. And if everything went perfect for a year or even year and a half, I'll never ask 5 years because I think that's an impossible question in Web3. But in a year and a half, if everything goes perfect, kind of where do you feel like you find yourselves?
So in the vertical we're currently in, we see the biggest growth. So we built Region. That's the Region portal. It's the retail tool I was telling you all about, with the automatic opening of a GMX long with just dollar collateral. That's the whole thing where you can't lose your principal on like 100x leverage. We built that to help raise awareness of how the system works. But our long game is we're working with institutions. Institutions want to enter this space. Crypto native hedge funds, larger guys with whom we may or may not be talking, prime brokers, all of these guys want to come in, and they need stability on their yield. They can't have the kind of crazy volatility swings we see. We see ourselves as the tool that facilitates their entry to the space. We see ourselves as the fixed rate provider for the entirety of TradFi's migration to DeFi. That's the dream.
Great question and great answer. Rob, we really appreciate you coming. I think it's been a great conversation. I learned a lot. I didn't, aside from, the space that I know you had with Dell recently, I didn't know a lot about financial NFTs. So it's been great to dig in more to that. And if anybody, if somebody's new or wants to check out the product, or where should they go? What should they do? Where's a good place to start off?
Come to our Twitter. Stay tuned. Resonate.finance.